It's like 1 out of 5 stars. And I couldn't even tell you what happened because I was surrounded by Lions fans, and Lions fans were great. They traveled really well last night. But just what a very odd experience a Monday Night Football game actually is. And then to notice that the Ravens are constantly on like Thursday Night Football, Monday Night Football, Sunday Night Football, and I get it. But I was talking to Scott just before the show, and he's right. Football needs to be played at 1 o'clock. 1 o'clock on Sundays. That's it. Like, it's not a great time getting home at 12:30, 1 o'clock from a football game that a team just lost. I don't care about the Ravens. I'm a Bills fan. But that said, yeah. So like that's where my head was, and that means it's time to move forward, everybody, into the future. And the future is all about understanding what is happening in this broader market right now. We got Jerome Powell going to be speaking. We have futures choppy right now, 67.50. Yeah, that's right. All right. So it is 8:47. It is September 23rd. Good morning, G-Man, Lyndon, Rodney, D. Cox H. Sure. You could just name yourself. You could say, my name's Don or Dave or Tim. Secret Agent Charlie, good to see you. Good morning, Eric in Northport. I know you're in there somewhere. Ed Mines is up with his little clown face. Everybody's excited. I agree with you. College football is way better. Okay. First off, the problem, unfortunately, is that I don't have a good college team. I wanted to go to University of Florida. There were 2 colleges my father would not allow me to go to. Pepperdine. And when I asked him why, he said, when you see it, you'll know. And I turned 24 and I flew out to LA to work on a book and rented the fastest car I could possibly get. Drove up PCH to Pepperdine, sat on that hill with the cross and just looked down and go, oh yeah, I would have got nothing done. Second was University of Florida, which had a great journalism program. But he said, you're just going to stay inside and party. And I went to Northwestern where it was nothing to do but stay inside because it was minus 70 degrees in April. Woo. All right, here we go. Brent crude up 63, 67 on the Brent side. WTI up at 63. Gold hitting an all-time high, 38.15. Guys, I can't make it any easier for you. They're going to keep printing money. We're going to be at 4,000 within a month and a half. Silver, going to hit 45. It's going to 50. This is not wild speculation. This is not, oh, yeah, I think that NVIDIA is going to hit 47,000. No, gold and silver are going to new records every single day because they keep printing money everywhere in the world all at once. $15 trillion in global liquidity has been added since January 2024. What more do you need? Smile and buy the metals and hold it because silver is going to go to 60 and gold is going to go to 5,000. And people are going to say, wow, people are speculating on this. The dumbest thing I have seen, this is the dumbest. There needs to be an intervention. There needs to be a legitimate intervention on this man. And I like him, and it's fine. This is an article that I haven't written yet, but I want to point this out. This was a real tweet. I would like to see a pause in the endless rally of speculation, gold, crypto, and profitless companies. Mr. Kramer, do me a favor. Petition to your central bank. This is not speculation. This is because they keep turning the damn money printer on. The global monetary supply continues to expand. That's why gold's up. That's why profitless companies are up. That's why silver is up. That's why the S&P is at all-time highs. I don't know how to make it any simpler than this. This is the stupidest thing I've read in 2 years. It's dumb. This is stupid. Come on, God. Come on. You got to be better than this. And 634,000 people didn't just run directly into a brick wall. Come on. This is how the market works. This is it. The whole market is completely predicated by liquidity in the global markets, and that chart that I continue to show you over and over and over again. We're up $15 trillion in 2 years. Did you think gold was going to hit an all-time high? Did you think silver was going to hit an all-time high? And by the way, you're not making money. You're just hedging against the fact that the fiat currencies continue to get their teeth kicked in. 6750 on the S&P 500. Russell, nearly 2,500. And everybody's going to look at me like I'm insane when the S&P 500 hits 7,100. And it's not a bullish call. That's not bullish. It's not bullish to say the Russell's going to 3,000. It's not bullish to say that the Dow's going to 50. It's not bullish. It's math. It's liquidity. It's the expansion and the debasement of our currency. That ain't bullish. Hate to break it that way. There is no such thing as a bull or bear market. We have liquid or illiquid markets. That's it. So at an 11% clip, and you're losing 8% on debasement alone a year and 3% to inflation, you need to be at 11%. That's why you got to be a part of Blake's 10% a month group. Because if you hit 10% a month, well, you have nearly caught up to the debasement of your currency in 1 month. That's the whole point. All right, let's dive into this. As you know, we are in the market for one reason and one reason only. We got to stay ahead of things. 9:30 is going to be your opening bell. That's where you have to recognize that there are stocks worth engaging today and stocks that are not. There are stocks that are breaking out and stocks that are breaking down. Is today a safe trading day? Is the S&P 500 above its 8-day moving average? Is it above its 20? Yeah, it's safe. This is not a liquidity trap. This is not a liquidity event. That's what we focus on. I focus very heavy macro, but I focus on macro unlike anybody else in the world. I look at insider buying, macro, liquidity, and momentum. And we're going to talk about our momentum reading in a minute. And then in 7 minutes, you're going to get the runner of our breakout stocks and our breakdown stocks. That's why we do what we do. All right. 5. Rotation. That's what you're looking at right now. You're looking at a situation right now where the market is choppy and it keeps just burning higher. It burns higher. A little bit of a rotation today in some energy stocks. That's just oil prices. We're coming kind of out of some oversold territory on that 30-minute chart, but we see the cyclicals continuing to be strong. We see the basic materials, gold, silver, copper, continuing to move higher. And I want to point something out. Again, I just noted this. Gold is at an all-time high. Silver is at 45. Not because it's some magical thing that I have to hold and bury in the ground in a Folgers can. It's at an all-time high because our currency sucks. That's it. Our currency sucks. They have lost control of the narrative. They have lost control of our currency. So other central banks around the globe are loading up on gold and still buying it at all-time highs because they would rather own gold than have the reserve currency, which is the United States dollar. In April, when the market collapsed, more central banks bought gold than ever before instead of buying the dollar. And more people in countries like Argentina, unstable governments, they wanted stable coins. They didn't take the dollar. It was the first time it ever happened. First time it ever happened. The confidence in the U.S. dollar is down. Now, will it come back? I don't know. That's what an economist is supposed to know, but I don't. So the question is, how do you protect yourself? How do you stabilize? How do you focus on things that matter? Very simple. And I put together that article. It's called The Next 36 Months. I wrote it in April. I gave it away for free. It's in the chat now. Okay? It's right there. This is the tactical roadmap for liquidity and trade-driven opportunities. This is about understanding gold and silver and very capital-efficient businesses. If you read this and you focus on this and you understand this, This is something that I promise you no one else is writing about. And I'm going to be very humble when I say this. What I wrote about, I discovered by accident. I did it by accident. Does not make me the smartest person in the world. It makes me the most prepared. And there's a difference. So I want you to recognize, I want you to read this. I want you to reallocate your portfolio. I want you to have a conversation with your RIA who doesn't know what he's doing. And I want you to take the money that is kicked off in the dividends, that some of the things that I'm talking about, like energy transfer and EMO, and I want you to trade that money. Get a 7% yield off of energy transfer or EMO or enterprise product partners. Trade that money around what we're talking about in this link. Again, it's free. And try to turn that 7% annualized gain into a 50% gain. That's how you will stay ahead of the game. All right. So as we dig deeper into this, again, S&P 500 momentum remaining positive, very positive. If this figure goes negative, remember what we're doing. This is hardcore mathematics, right? I don't like algorithms and I don't like models. I like models, but not economic models. The point is, you take every single stock, you put it on a bell curve, you take the stocks breaking out minus the stocks that are breaking down. And this goes back to J.D. Henning's phenomenal analysis in multivariate analysis and reversion momentum, his PhD at 2016. And you take the number of stocks breaking out versus breaking down, and you can track outflows. Well, if this figure goes negative, we turn to the FNGD. And if the FNGD is breaking above its 20 and its 50-day moving average, that's where we move to cash. That's where we get protective. That's where we start to move to the downside. And again, back in March, it happened in February 21st. We had a huge sell-off in April. And to prove it, every major event that has happened in the last 5 years has aligned with breakouts on the FNGD, because this is leverage leaving the system. This is leverage leaving the system. So when the S&P 500 breaks under its 50-day and the FNGD breaks above its 50-day moving average too, that's where you short the market. That's where you have high conviction, push your chips across the table and say, this market's screwed. But we're defying gravity at this point. We are not there. Don't try to be the first person over the wall. It doesn't work. Wait. I can't stress this enough. I can't stress it enough. You're going to read Barron's and you're going to read the Wall Street Journal and you're going to read all this bearish news, but you're not going to recognize that the mechanism of this market is still around liquidity. Yes, Miguel, you're right. It's going to reverse split. So what will happen is this will get down to around 3. They'll reverse split it by 10, and then the FNGD will go to 30. And then we just, go from there. But you could see this is split adjusted, right? Like 1,000, 2,500, 30,000, 70,000. Look at that. 120,000. It's all split adjusted. So they'll refine it. That's the entire purpose of these assets. All right, it's 9 o'clock. I was supposed to tell you about the runner. Why don't we just do the runner real quick, and then we'll return back to the macro. I got on a little bit of a rant this morning. I'm still waking up. All right. The runner. The runner. Good to see you, Charlie. All right. mRNA. This is a good one. This is the type of stock that I'm looking for on momentum. Because, again, I don't really know how or why this is a thing. This is one of those companies where we're going to look back and we're going to go, Moderna. Huh. Anybody go to jail for this? Nah, it's not the Sachs family. 50-day moving average. 2665. I like this from a reversion standpoint. And as you are seeing right now, MFI, RSI, MAADX, ATR, improvement. What's the trade? Well, I like this from a momentum perspective, and I like going out to October and buying 25 and selling either the 27.50 or the 28. I don't know what the option chain looks like at the moment, but I like this kind of line in the sand built around the 50-day, and I love the fact that the 8 is crossing over the 20 right now. So keep a tight call spread in focus, aim for a 50-60% gain, and keep your stop back here that you can't get beaten up. What do I think of Bitcoin? I'll explain that in a moment. Good question. BA. Bowen. It's a tough one, but I liked it because, again, if we can get above that 8-day, what your trade becomes is that line in the sand, that 217.50, 217 level, back up to the 222 level. Same story. Sell a put, or forgive me, sell a call, buy a call, set a stop, and move on. You're looking for a move from here to here. That's it. It's $4, but you can do a lot with $4. Again, as you can see, this move here off that swing on that 8 and that 20, that led to renewed momentum, and you had the stock go from 203 up to 240. I think Boeing can hit all-time highs, and again, the United States government loves to protect the industrials. GAMB, don't know what you do. It sounds like a gambling stock. It probably sells some sort of farming equipment for all I know. Gambling.com, look at that. Nailed it. Oh, let's end the show. That's it. Nailed it. Love that for me. Buying the stock at 850, selling at 925. That's the trade. Buying the consumer cyclical, taking up everybody on the fact that we are all compulsive gamblers, everybody looking at their phones to determine whether or not Derrick Henry will get 2 touchdowns and 60 yards. That was pretty much the highlight of the night last night, was just a lot of people telling me about their fantasy football teams. I cannot tell you how little I care. But they still told me for 2 hours on the way down, on the way back, in the parking lot. Oh, my fantasy team. I need Jamal Gibbs to get 767 yards tonight for me to win. I don't care. I'm just trying to watch this terrible sport. Ugh. 846, 2, 932. Okay. Watching Lamar Jackson is actually pretty entertaining. He starts improvising. He runs backwards 20 yards. He drops the ball, and then he shakes his head as though, "Wow, why did I do that?" Because that's what you do. You are the scorpion. You are the scorpion that killed the frog. It is in your nature, Lamar. Will you ever win a Super Bowl? Hopefully not as long as Josh Allen is in the league. Lamar needs focus. Wolf, I'm telling you, bud, you might want to come to Baltimore and try to do that job. That is never going to happen. That man, imagine if Lamar, we should have like a Don idea. All right, here's what we do. We create like a guest bartending thing for TheoTrade, but it's guest trading. And we get Lamar Jackson to try to trade volume weighted average price. And we watch him he ain't going to do all right. That would be bad. Gambling.com, everybody. So at 845, I'm buying the stock, and then I'm going to look to sell it at 935 if we can retest that 50-day moving average. Hey, Scott, be quiet. Nobody cares. They lost. BBY, Outly, OTLY. Isn't that an oat milk stock? Oh, yeah, that's bad. There's no way to short this, unfortunately. It's a Swedish oat milk company, and I was long it back here, at 9, and I sold it here at that 8-day moving average. Remember, that's what we're focusing on. No real way to short that, so let's let that one go. BBY, though, what a train wreck Best Buy is. It's the worst. Um, we need this to be under its 50-day moving average. If it moves back under its 50, add this to your watch list. We move under that 50-day moving average at 72.64, buy the $77 put and looking for the downside. This is something that I will be monitoring during the day. If it breaks down after our opening bell, then yes, I will be in the money on BBY. Probably going to buy something in that first week of October range, but staying high delta, maybe the 76, maybe the 77. I'm not looking for a huge gain. I just want to make sure that I'm playing defense around that 50-day moving average. React and RXRX. Once again, I remind you, this is the hidden gem of the stock market. RXRX continuing to push back above that 50-day. 507 is your line in the sand. This is a buy. Buy the stock. You set your stop at 490. We are looking for a move back to that 200-day. That is a 16% gain. If we can get back to 580, this stock tracks NVIDIA very, very closely because Mr. Huang, is that his name? I'm just going to say it that way. Mr. Huang is very influential on RXRX, which is a Recursion big AI name in biotech that a lot of people don't recognize as a great opportunity. And NACT Holdings, chopping around that 8-day moving average. I like this as a straight call buy around the $38 level, simply staying in the money, looking for a push back up to those recent highs. This is a very nice little chart. I'm just going to note that. Remember, momentum returns, crossovers on that 8-day and that 20-day moving average. And you get these moves, 35 up to 38. Doesn't seem like it's a lot of money, but it's a 10% move in a week and a half. And if you're using leverage and you're using options, these are the types of stocks that definitely pay off. Finally, Riri. This is a tough one because of the ADR in China, but remember, China continuing to ease, strong capacity right now, like just buying the stock, setting a stop right back, 3%, 4% stop, right back at this key moving average, looking at that move right now on that 8 and that 20. These are the types of moves we're looking for. We're looking for a stock that trades at 250 and has the capacity to run to 430, 338, up to 480. You just buy it, you set a tight stop, and you keep trading it until it breaks. Good name, good company, good stock. All right, it is 9:10. We went through the runner. Let's just briefly talk about what we're doing today. Mr. Jerome Powell is going to be speaking, and everybody's going to hang on to him like he is the oracle. I'd rather just watch Stephen A. Smith talk about football than listen to Jerome Powell talk about interest rates, but and that's bad. Tech-driven gains, again, taking a little bit of a pause. This is all about the SPY, the Qs, and the DIA. And as I noted, it's really about understanding that in this environment, when Powell speaks and when people like Jamie Dimon open their mouths, you can get these reversion moves. And that's what we're focusing on. This is the SPY, S&P 500. That's pre-market. But as you saw yesterday, no real opportunity until we broke above volume weighted average price. And you're either looking for a reversion where basically this S&P 500 gets down into the fourth deviation of price, or on a slow burn day like yesterday was, you're buying at the money at volume weighted average price, and the market just burns higher the rest of the day. If you're buying into an upward sloping volume weighted average price, then your stop is naturally cooked in, because as you could see, if this would have reversed and came back down here, you would have been in at 662.44. Maybe you were out here at 662.89. You would have made a couple of bucks trading the in the money call. But the more important component of this is just the reminder that the market's either going to do this or it's just going to burn higher, because that is the way that liquidity works. And then we get into those more choppy environments that we always talk about. That's where we see this, right? That just all day movement built around volume weighted average price and the standard deviation lines. On Friday, we had that type of move. The 660 call went from about $1.20, finished the day at $4. So all you're doing, remember, is you're building yourself around Bollinger Bands. You're looking for reversals, you're looking for sell-offs, and then you're taking advantage of what Stanley Druckenmiller talked about, which is the fact that in the past we have seen algorithms stepping in and bidding while everybody else is panicking. Trend is gone, and then all of a sudden the market sells off to start the day. It hits the fourth band right there. See that little tiny red line? There she is. And then what happens? You finish the day up. There's no rhyme or reason to this. It's just pure reversion and pure momentum in this environment. All right. On top of that, gold. If it's funny because people keep sending me emails and they'll say, "What do you think of gold now?" I'm like, I think it's going to go up. I don't know how to make it any simpler. This has nothing to do with what I think of gold. It actually has everything to do with what I think of the dollar. The dollar is a disaster. They're cutting the value of it. Other fiat currencies are cutting in order to protect themselves. That's one of the things that people have to really understand, is that there seems to be an effort by the Treasury Department. And again, this goes back to basic Keynesianism. I was sitting in a class at Purdue University, my 2010, 11. I had a professor. His name was Phil Abbott, great professor, pure Keynesian. He was Paul Krugman's roommate at MIT. And I said to him, "What's the end game here with the debt?" And the debt was only like $17 trillion at the time. And he goes, "Well, you inflate it away." And I said, "Well, that doesn't make any sense." And he goes, "Well, what do you mean?" I said, "Because people are going to pile into other risk assets or gold or silver." And he goes, yeah, but like you inflate away the dollar. And I said, "No, like people will lose confidence in the currency, and it will lead to a radical pop in gold, which has been around for 5,000 years." And he legitimately like kept pushing me on this. Meanwhile, I'm in a room full of 25 people who have no idea what the hell I'm talking about. They're all like studying economics for the first time. And this guy and I are just going back and forth for a good 20 minutes. And finally somebody said, "Can we do anything else?" And I said, no, this is actually really important. Like this speaks to, because again, we were studying commodity economics. This speaks to the fact that if you lose confidence in a currency, it goes fast. It is Ernest Hemingway style, gradually, then suddenly. How did you go bankrupt? Gradually and then suddenly. If people lose confidence in the US dollar, and you can already see that half of the planet already has, gold is going to continue to move higher. That has been the hedge for 5,000 years. And it's a important reminder that we all collectively have this recency bias around the currency itself, because that's all we've ever known. And you have to always stop every now and then and say, wait a minute, what if there's another way? Gold continues to move higher. And if you missed this run, sitting at 3,800, right? We're in that range. Sell spreads. Go to the buy the PHYS, which is basically pure gold. Go to the GDX. Sell spreads to the downside at the 50-day moving average. If you missed the run, you don't have to chase the run. You can pick your poison. You can pick the point that you want to enter this at what level you want to buy it. You could sell spreads on the GLD. You don't have to buy it at the current price. You can always reset and give somebody the obligation, but not the right, or forgive me, the right, but not the obligation to sell you gold at a lower price if it sells off. And I would take it all day, every day. I'm going 4,500 on gold within the next 18 months. And then I think we'll have a liquidity event, and we're probably going to have to scale back. And then all of a sudden, gold will probably move back toward the 5,000, 5,500 level. And again, it has nothing to do with gold being a superior investment. It has everything to do with the dollar. That's the issue. Somebody said, Garrett, what do you think of Bitcoin? Okay, let me explain something real quick, and I'm going to show you a chart. And really, that's it, right? So how gold, Bitcoin. Let me find this chart, because this chart tells you everything you need to know about the financial system itself. Let me find it. Give me a second. Nope, not there. I'm in my email looking for it. All right, Bitcoin. Where the hell is it? How? Oh, this is riveting entertainment, everybody. I apologize. Okay, so I can't find this chart. I'm going to keep looking, but I'm going to keep talking while I explain it. Basically, Bitcoin is a pure reflection of global liquidity, according to Michael Howe. And the relationship between Bitcoin and liquidity is like 85 on the R squared. It's monstrous in terms of the relationship. And what we're talking about is the fact that liquidity, as Michael Howe explains it, is that as liquidity expands, Bitcoin goes up. As liquidity contracts, Bitcoin goes down. And every single Bitcoin winter, right, that crypto winter that everybody talks about, the reality is that I'm just going to show you this chart. This is the liquidity chart. Okay, so basically, I want you to just go back, look at Bitcoin prices. Bitcoin has basically done the exact same thing. This period right here, this is where Bitcoin was at 65,000. This is where Bitcoin was at 20,000, 15,000 even. And then it has just steadily moved higher. It's all a reflection of liquidity. That's what Howe has pointed out. The relationship between Bitcoin and global liquidity, it's about 80% strong relationship. Bitcoin has a relationship to gold as well. But the point that I'm making is that there will be a top of this liquidity cycle soon, probably in the next 18 months. Don't be shocked to see Bitcoin lose 30, 40, 50, maybe even 60% of its value as liquidity tightens. And that creates a buying opportunity. And that's
Gee,
how
you're on the
you
wrong screen. Sorry.
How am I on the wrong screen?
I don't know, but you are. You're on the gold surges to new records screen.
I'm not seeing that. I'm seeing my picture on weekly liquidity.
I see it too, but maybe there's a delay. I don't know. Someone said you weren't showing your chart. So,
Well, he has to reset. That's why. This is weird. I'm looking up to the heavens and a voice is coming. What
yeah.
is that? This is very strange. Basically, if liquidity were to dry out, BTC would crash. Rosario, you nailed it. You got it. That's exactly the point. And you can look at the Bitcoin charts and you can see 2013 into the 2015 squeeze, 2017 into the 18 squeeze, 2021 into the 2022 squeeze. Now we continue to extend higher. If liquidity tightens up, boom, crushed. But here's the point. Last point before Don throws me out of this room. It is a reminder that if you want to know when it is time to buy Bitcoin, follow what the insiders are doing. Because the bottom of all of these moves, right? These spikes in insider buying to selling, this all was where accommodation took place. And when accommodation takes place from the central bank and they ease and they engage in quantitative easing or non-quantitative easing, well, sure enough, you're going to find that the spikes in Bitcoin, oh, and by the way, Bitcoin hit 2,500 in mid-March 2020, and it tripled in a month. That's what you're looking for. So be patient. Wait it out. All right. Garrett is showing different charts in different rooms. Definitely not doing that. Definitely not trying to do that. But nonetheless, it's 9:20, which means I got to wrap it up. All right. So, what are we doing this week? I'm going to be back on Thursday with a very special presentation about equity markets. I hope that you will join me. In addition, I want you guys to come back. I want you to listen to what Don has to say. Volatility is subdued in this environment, but it's going to come. It's going to come, and you guys are being very patient. We are on one of the longest heaters of the S&P 500 above its 50, 20, and 8-day moving average that we have seen probably since 2020, and then we would have to go all the way back to around 2011. This environment is going to continue to do what it does until it stops. And I know that that sounds like a cop-out. The point is, volatility is going to pick up relatively soon. They can't keep doing this forever. And when we have these environments right now, like we have, you have to take a step back and you have to recognize, I need to be prepared. I need to be prepared for that big 4, 5, 6%, 7% move on the VIX. I have to prepare for the FNGD to break out. I have to be prepared for the downside, because those are going to be the once or two times a year that you're going to be able to make a ton of money. And Miguel's pointing out right after your VIX calls expire. Exactly. So what are the optimal conditions? When is the right time to do this? We're going to walk you through that today at 3 o'clock. Don's going to bring you into the opening bell right now, and I will catch up with everybody else later. If I don't see you today, as always, I am here every day at 8:45 for free, giving you the runner and everything else. Tell Tex thank you. Secret Nature Charlie, thank you. I hope you all have a great trading day. Don Kaufman, everybody. Take care.